Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is February 26th, 2025. Good morning, everyone. I'm delighted to have you here as we dive into the exciting world of markets, trends, and global economic shifts that continue to shape our investment landscape. Today, we're unpacking everything from the latest index moves to intriguing geopolitical and technological developments that could have far-reaching implications. So let's get started.
Let's begin with a quick market overview. On the equity front, the S&P 500 closed at approximately $5,971.62. That represented a barely noticeable uptick of 0.01%. Meanwhile, the Dow Jones Industrial Average ended the session at around $43,634 and roughly 40 cents, showing a slight dip of about 0.003%. Over in the tech-heavy Nasdaq, prices ticked up a bit, reaching nearly $19,110.41 with an increase of roughly 0.06%. However, not all market sectors are enjoying a uniformly calm day. The Russell 2000, known for its focus on smaller capitalization stocks, experienced a more pronounced decline, falling by nearly 0.5% to settle at roughly $2,170.08.
In the world of digital assets, Bitcoin continues to generate plenty of buzz. The pioneering cryptocurrency found itself at approximately $86,562.34, later recording a drop close to 2.27%. Ethereum wasn't too far behind in its own underperformance, with prices landing at roughly $2,408.08 and sliding down by nearly 3.38%. These moves in the cryptosphere remind us yet again of the volatile and rapidly evolving nature of digital currencies, an aspect that is both fascinating and challenging for investors.
Taking a step back, it's always interesting to observe these relatively modest shifts in our major indices on a day when broader geopolitical and economic narratives are playing out. For instance, the careful balancing act by investors amid hope and apprehension in both traditional and alternative asset classes has left us with an overall sense of cautious optimism. In fact, even though percentage changes sound negligible at first glance, they serve as valuable barometers of market sentiment, particularly when considered alongside the events that we're about to explore.
Moving on to a deep dive into major market trends, the conversation today centers on the interplay between traditional economic uncertainties and ever-accelerating technological disruption. For starters, we're witnessing a persistent tug-of-war between inflationary pressures, geopolitical tensions, and changes in government policies. One of the most talked-about developments recently revolves around the energy sector, especially as oil prices have been showing signs of vulnerability. Oil futures have been trading at lows reminiscent of 2025 price points, and this development is partly being driven by tariff fears and a cautious market sentiment that is closely watching any signals related to an end or pause to the war in Ukraine.
Now, if you're wondering how a potential ceasefire or diplomatic breakthrough in Ukraine could impact prices, consider this. A shift in the balance of power in that region might unwind some of the existing sanctions on Moscow, which in turn could have profound repercussions for global oil prices. And let's be honest, who wouldn't be a little nervous when seeing such volatile dynamics at play?
In the tech sector, companies are contending with rapid innovation and pricing pressures, especially when it comes to artificial intelligence and semiconductor technologies. One interesting angle here is the chatter about how companies that integrate AI into their models are faring compared to hardware manufacturers. Some market voices like that of value investor Bill Nygren have been sparing no praise when discussing why heavy-hitting tech stocks such as Nvidia might not quite be the best AI bet at the moment. Instead, Nygren suggests that investors should keep an eye on companies leveraging AI effectively rather than those primarily engaged in producing the hardware that powers these innovations. This distinction is more than a semantic nuance. It represents a broader trend where the democratization of technology is reshaping traditional market hierarchies.
The ongoing discourse about energy prices and geopolitical uncertainty continues to be a primary theme for many investors. Back to the oil market, those nervous moments we mentioned earlier about oil trading at 2025 lows on the back of tariff fears and shifting sentiments about the Ukraine conflict speak volumes. There's this infectious mix of anxiety and anticipation that's making investors both cautious and opportunistic at the same time. On one hand, there's a clear worry over the potential for tariffs and other protective measures that could tighten supply or alter demand dynamics. On the other hand, some optimists are hoping that a de-escalation in the Ukraine war might lead to a moderation in sanctions imposed on Moscow. The ripple effects from such policy shifts can impact not only raw energy prices, but also sectors that depend heavily on oil and gas earnings, everything from transportation to manufacturing.
Shifting gears to the crypto dimension, while many of you remain captivated by the dramatic swings of Bitcoin and Ethereum, recent security issues have continued to keep the sector on its toes. One headline that's been making rounds in our circles is about North Korea's so-called crypto hack. Let's put it bluntly, a $1.5 billion heist is being dismissed by some experts as chunk change in light of what might be lurking beneath the surface of crypto vulnerabilities. It raises the perennial question about the future of digital currencies. Can a market so prone to cyber heists ever truly reach mainstream financial stability? Such vulnerabilities could well be the reason why Bitcoin and its peers aren't yet ready for widespread use as everyday transactional currencies, despite the many advantages they offer in decentralization and innovation.
Now let's look a bit deeper at our individual news stories, as there's plenty to unpack here. Our first set of full coverage stories comes courtesy of the discussions surrounding oil prices. Repeatedly, news outlets have been talking about oil trading at those 2025 lows. The repeated emphasis on tariff fears, combined with cautious hopes about an end or at least a significant de-escalation of the Ukraine war, suggests that market participants in the energy sector are bracing for some choppy waters ahead. It's as if the industry is standing at a crossroads, with one path leading to potential regulatory relief and the other filled with just enough uncertainty to keep traders awake at night.
Then we have the recurring narrative on North Korea's $1.5 billion crypto hack. It's been echoed across multiple reports, each reiterating the notion that while one might be tempted to sound the alarm on a heist of that magnitude, in the grand scheme of things, it may just be a small dip in the overall landscape of cyber threats. However, let's be clear, dismissing it as chump change does not mean that investors should completely ignore the trend. Cryptocurrencies remain highly volatile and vulnerable to cyber intrusions, and these incidents are a stark reminder of the infrastructural and regulatory challenges that still need to be addressed.
Next on our radar is the story involving intuitive machines. Now this one is particularly exciting for those of you who follow the space sector. Intuitive Machines stock has been on an upward trajectory as the company gears up for its second moon landing mission, dubbed IM-2. This isn't your everyday space mission. It's described as a very complicated prospecting undertaking that will take a drill, a hopper, and a rover to the lunar surface. The CEO has been candid, describing the mission as emblematic of the challenges and triumphs present in today's aerospace innovations. It's a remarkable blend of ambition and technical prowess that puts Intuitive Machines squarely in the limelight for investors who are looking for growth prospects in the burgeoning space economy.
Finally, let's revisit the perspective of value investor Bill Nygren. His recent commentary, shedding light on why Nvidia might not be the ideal AI stock at this moment, is resonating with a lot of the latest market sentiment. Nygren's advice, to instead focus on companies that effectively integrate AI into their processes, provides an insightful counter-narrative to the prevailing enthusiasm for hardware-centric tech plays. His perspective invites us to think more critically about how AI is fundamentally transforming industries and which players are positioned best to benefit from these changes. It challenges the conventional wisdom and encourages a deeper analytical stance when evaluating tech investments.
As we transition into a detailed sector analysis, let's break down what these developments mean for key areas such as technology, energy, and finance. In the technology sector, it's clear that the debate over what constitutes an optimal play in artificial intelligence is far from over. On one end of the spectrum, we have companies that are leaning heavily on developing and manufacturing cutting-edge hardware, while on the other, we see a burgeoning emphasis on software, analytics, and end-to-end solutions that harness the power of AI in real-world applications. Bill Nygren's insights about Nvidia are a reminder that sometimes the market ahead of us is not simply about the flash and dazzle of semiconductor giants, but about the quieter disruptors that integrate AI into everyday business processes.
For instance, as companies continue to incorporate AI to streamline operations, reduce costs, and enhance customer experiences, investors might find more value in those companies that manage to leverage these tools effectively rather than those that are solely on the manufacturing side.
Turning our attention to energy, the oil market provides a classic case study in the interaction between geopolitics and market dynamics. The current low trading levels, influenced by fears over tariffs and a potentially shifting geopolitical landscape in Ukraine, have created both risks and opportunities. With oil prices lingering at 2025 lows, one might ask, are we on the verge of a significant turnaround once diplomatic breakthroughs occur, or will the headwinds persist longer than anticipated? It's a fence-sitting scenario that underscores the unpredictable nature of politics in energy markets. For companies involved in exploration and production, as well as for investors holding energy stocks, the message is clear caution is warranted, but there might also be lucrative entry points if the market oscillates favorably in the near future.
In the financial sector, the relatively muted moves in major indices like the S&P 500, the Dow Jones, and the Nasdaq reflect a market that is still digesting these complex cross-sectoral issues. While traditional equity markets are often seen as safe havens in times of political and economic turbulence, the subtle shifts we're observing suggest that investors are playing a waiting game, carefully weighing the balance between risk and opportunity. The slightly negative performance of the Russell 2000 further hints at the vulnerability of smaller cap stocks, which can often be more acutely affected by shifts in investor sentiment and market liquidity. This divergence between the actions of large cap indexes and the challenges faced by their smaller counterparts offers an intriguing dynamic. It tells us that while the major players continue to exude a semblance of stability, caution should be exercised when venturing into less liquid or more speculative spaces.
Let's discuss the global market implications. When star players on Wall Street adjust their positions based on geopolitical risks or sudden shifts in policy like what we're seeing with the energy price fluctuations, it isn't just a local event, it's indicative of a broader interconnected system. Markets around the world are reacting, and regions as diverse as Europe and Asia are watching these movements closely. For instance, a relaxation of sanctions on Moscow could lead to an influx of energy supplies that might temper price hikes elsewhere, while at the same time, any escalation in crypto vulnerabilities might prompt regulators globally to tighten their oversight of digital currencies. The domino effect is real, and it's in these global interdependencies that we can find both the seeds of potential growth and periods of systemic vulnerability.
Expert insights and predictions are always a highlight of our morning briefings. Many seasoned analysts agree that the current market environment calls for a delicate balance between optimism and prudence. Looking forward, some experts suggest that the current modest shifts in equity prices could soon give way to larger moves if geopolitical or economic catalysts emerge. Consider the situation in Ukraine. A potential diplomatic breakthrough could suddenly buoy oil prices, which in turn could ripple through energy stocks and related sectors. Conversely, if tariff fears escalate, it might lead to precautionary selling in not only energy, but also in regions where global supply chains are under stress.
In the realm of digital currencies, while the recent security breaches serve as cautionary tales, there's no denying that both Bitcoin and Ethereum continue to hold strong appeal for a segment of investors attracted by their long-term promise. Many financial analysts are now advocating for a balanced approach that includes a modest allocation in digital assets, particularly given the ongoing regulatory evolution and the drive toward institutional adoption. However, as we've seen, risk management remains critical. As one expert quipped earlier in the day with a touch of humor, investing in crypto without a safety net is like trying to ride a roller coaster, blindfolded, thrilling, and potentially disastrous if you're not buckled in.
It's worth sharing a lighthearted moment here, a joke if you will, to remind us that even in the most intricate of market analyses, a bit of humor goes a long way. Imagine if your portfolio could talk back, "Hey buddy, I'm not here to give you a heart attack every morning, but I'd appreciate if you'd let me get some sleep at night." It's these human moments that keep us grounded when the charts and numbers seem overwhelming.
Now, speaking of real-world implications, how do these trends affect various sectors? In the tech world, the focus continues to shift from the hardware heavyweights to the agile software innovators. This dynamic is reshaping the narrative for investors as companies that successfully integrate artificial intelligence gain a competitive edge over those simply churning out chips. In the energy sector, the uncertainties around oil prices force both companies and investors to be nimble, preparing for a market that may soon pivot on new geopolitical realities. And then in finance, the nuanced moves in leading industries remind us that even amid reassuringly small percentage changes, the undercurrents are constantly evolving.
As we wrap up our detailed sector analysis, I'd like to emphasize that the global implications of today's moves make it clear. This isn't just about a single index or commodity. It's about understanding the interconnectedness of our economic world. Whether you're an investor focusing on equities, a trader with an eye on crypto, or someone who tracks commodity markets, the lessons here are universal. The interplay of political risks, technological innovation, and sector-specific challenges is setting the stage for a market environment that is as exciting as it is unpredictable.
To sum up our expert insights and predictions, here are a few key takeaways. First, investors should remain attentive to the evolving narratives in energy, where oil prices trailing at 2025 lows remind us that what happens in the corridors of power can have immediate effects on our portfolios. Second, the recurring focus on digital asset vulnerabilities, exemplified by North Korea's $1.5 billion crypto hack headlines, underscores the need for robust risk management in an increasingly digital financial environment. Third, in the tech sector, the discussion around AI highlighted by Bill Nygren's commentary on Nvidia encourages us to look beyond the surface and evaluate which companies are truly prepared to capitalize on the AI revolution by integrating these technologies in a meaningful, transformative way.
And finally, the subtle yet telling moves in major indices speak to a market that is cautiously optimistic, reeling from geopolitical uncertainty yet poised for opportunity if the underlying trends shift even slightly.
Before we close out today's briefing, I'd like to pose a few thought-provoking questions for our listeners. What do you think will be the catalyst that finally tips the scales in the energy sector? A breakthrough diplomatic negotiation in Ukraine, or perhaps the looming threat of new tariffs? And in the burgeoning world of cryptocurrencies, can you envision a framework where increased regulatory oversight finally tames the wild west of digital finance, or will the market continue to flirt with instability? As you mull over these questions, remember that your unique perspective is what drives innovation and progress in these markets.
Thank you for joining me on this in-depth exploration of today's market trends and stories. I hope you found our discussion as engaging and insightful as it was dynamic. At Pantheon AI, we work hard to be not just your morning briefing, but your trusted information co-pilot, guiding you through the labyrinth of market data, insightful analyses, and emerging trends.
As we say goodbye for today, here are some final thoughts. Keep a close eye on those key sectors we covered, from the unpredictable energy arena to the ever-evolving tech landscape, and even the unpredictable realm of digital assets. Whether it's the subtle dance of equity indices or the boisterous swings in crypto values, every movement presents both new risks and fresh opportunities.
I invite you to come back tomorrow for another episode of the PAI Morning Briefing, where we'll continue peeling back the layers of market complexity together. And remember, if you ever have any questions or need a deeper dive into any topic, you can always turn to our AI co-pilot for guidance. Have a fantastic day, stay curious, and most importantly, remember, learning should NT feel like a full-time job.